Welcome to Security Token Insight, brought to you by the Security Token Academy. The security token industry is here, and it'll provide a key foundation for the evolving financial internet. The Security Token Academy provides insights about this new era for security token enthusiasts, investors, and issuers. The security token industry is here, and you can get involved. Hey everybody, I'm Adam Chapnick. Coming up on today's episode of Security Token Insight, in your security token investing news, Tokensoft issues $4 million of its own equity via the blockchain. We have an expert interview with Dan Doney, CEO and co-founder of Securrency. And in our Security Token Stories podcast, you'll hear from Stephen McKeon, collaborative fund partner and a finance professor at the University of Oregon. That and more is coming up on this episode of Security Token Insight. Now it's time for your security token investing news. Up first, Tokensoft has issued $4 million of their own equity to investors via blockchain. Tokensoft investors receive tokens which represent their safe governed security via their investment accounts. Investors will benefit from their equity by receiving real-time authenticated access to ownership information with provenance of transactions recorded on the Ethereum blockchain, real-time periodic dividend payments in US dollars through an integration with Signet, Signature Bank's blockchain-based payments platform, and Tokensoft subsidiary DTAC LLC, an SEC-registered transfer agent. By the way, Tokensoft is a gold corporate member of the Security Token Academy. To learn more, go to our website, securitytokenacademy.com, and click the directory tab and select Corporate Member. Up next, it was announced that Fluidity has joined Consensys. Fluidity, who has previously partnered with Consensys to create AirSwap, joined Consensys in order to scale up their business and reduce costs. The merging of the two industry leaders will allow both companies to leverage each other's assets and teams in order to further serve their clients better. And finally, Banco BTG Pactual, the largest private investment bank in Latin America, is moving their real estate security tokens over to the Tezos blockchain. The company had previously issued its REIT-BZ tokens via the Ethereum blockchain. The company announced it'll move $5 million worth of REIT-BZ tokens to Tezos. Andre Portillo, head of digital assets at BTG Pactual, had this to say: "We don't want to be tied to just one blockchain because clearly I cannot tell which blockchain will prevail. We want to have other options, other blockchains that might serve better the pieces of tokenization and issuing tokens that represent real assets." And that's a quote. Hey, have you listened to our latest podcast? Make sure to check out Security Token Stories featuring Derek Schloss as he sits down for one-on-one interviews with security token industry leaders. Derek recently sat down with Stephen McKeon, who's a partner at Collaborative Fund and a finance professor at the University of Oregon. Here, Stephen and Derek discuss crypto asset valuation, security token base layers, and much more. Let's take a listen.
Steve, welcome back to Security Token Stories.
Thanks, Derek.
You are the only guest to have appeared on this show 3 times. Whenever I bring you on, it's always fun to do a roundup of different blockchain topics, since you kind of study and write and publish work across a number of different themes. The stuff we've talked about in the past, we've dived into kind of the macro finance stuff. We've talked about your role, venture investing with Collaborative Fund. We talked security tokens, DeFi, digitized finance. I think we're going to touch on all of those today. Here, kind of a roundup of things you've been thinking about recently, and we'll make this a great third part to the series. How does that sound?
Sounds great. Definite honor to be the most common guest. I'm a regular listener.
Awesome, cool. So, Steve, we're recording this episode on a pretty special day. It's the 10-year anniversary of Bitcoin Pizza Day. So, 10 years ago, this was May 22nd, 2010. A man named Laszlo bought $25 worth of pizza for 10,000 Bitcoin, which would give those pizzas a value of something like $90 million at today's Bitcoin price. So, Steve, as a finance professor who in the past has done a ton of work writing and studying our markets, things and concepts like value and price, and the discrepancy between these areas of finance, as well as a venture investor currently in the blockchain space, I'm curious to hear your thoughts on today, on Bitcoin Pizza Day, the original Bitcoin pizza purchase at the time and its role kind of kickstarting this informal price for valuing Bitcoin, and whether or not, 10 years later today, our methods for valuing Bitcoin and other crypto assets has improved.
Yeah. So first of all, I just think it's awesome that this space has a holiday around pizza. But I think to your question, it was really the 0 to 1 moment, right? In a sense that it was the first commercial transaction with Bitcoin. And so in terms of price discovery, there really had never been any prior to that. So we look back and we look at today's price, and it looks crazy, right? $90 million or $91 million for 2 pizzas. But remember that prior to this transaction, Bitcoin effectively had 0 value. There were some estimates around cost of mining and that type of thing, but this is sort of the first documented commercial transaction. So I think that's why it's such an important day for the space. So look, as we know, valuation of commodities like Bitcoin is challenging. Obviously, a lot of work has been done since the 10,000 Bitcoin for 2 pizza transaction. And we've got a bunch of different models now that we can use, some based on other types of commodities. But ultimately, it's really more about price discovery than valuation, in the sense that what you're really doing is forecasting supply and demand that influence the price of Bitcoin, because Bitcoin itself is not a cash flow generating asset. So that's what sets it apart from valuing something like equity. So Bitcoin Pizza Day was really important just because it was the first price discovery for the asset.
Yeah. Super interesting. And kind of piggybacking on that, since Bitcoin Pizza Day and over the last couple of years specifically, we've had a number of other crypto assets launched that kind of have some of these characteristics that are maybe a little bit easier to price. Do we feel like we have a better handle on it now than we did a year ago? I guess I'm curious to hear how you think about this with the different lenses that you have.
Yeah, so I think that, part of the issue is that for outsiders, they look at the crypto ecosystem and you start talking about valuation, and then maybe they view it as homogeneous. But as we know, for anybody who's been involved in this space for any amount of time, there's massive heterogeneity, right? So there's definitely never going to be a one valuation metric that fits all crypto assets. As you and I have talked about previously, crypto assets are just a functional form, right? It's a wrapper, and valuation is highly dependent on what's inside, not necessarily on the wrapper. And so, if it's a share of equity that's inside, you value it with discounted cash flow and comps and the traditional sort of methods that we have. If it's a fixed income instrument, you value it maybe a different way. If it's a decentralized network, I think those are the newer pieces, right? Then you really have to talk about what is the functionality of the network, like what is the good or service that the network provisions. And the way you might look at something like Ethereum, right, which has a utility in terms of things being built on top of it, and smart contracts, and everything we know about that ecosystem is going to be valued differently than something like Bitcoin, which is closer to a digital commodity or digital gold. And so when you talk about valuation, it really is the main thing to focus on is what is inside the wrapper. And that's going to dictate how you think about it in terms of value. Now, one thing that is unique to crypto assets is that we can see a lot of these things on chain, right? Which is part of our interest in the analytics side of the space. So, we have positions in Flipside and Coinmetrics, and the fact that you can view a lot of the activity on chain does create some commonality in terms of the analysis, but at the end of the day, it really comes down to what's inside the wrapper.
Go to our website, securitytokenacademy.com, click the Interviews tab, and select Podcast to listen to the full episode. The Security Token Academy is proud to present an expert interview with Dan Doney, CEO and co-founder of Securrency. I sat down with Dan to discuss what Securrency has been up to since the pandemic began and how ETFs are coming into play. Take a look. So as you know, as we all know, it's tough time for the financial markets and everybody because of this coronavirus. How is Securrency doing? How have you guys fared during this time?
This has actually been, personally, we've had one of our employees' wives was affected by this. We've been, unfortunately, my family's been unscathed. As a company, we're a global company already. We work remote as teams, so we haven't been affected in a significant way. I'm spending a lot less time in New York, and certainly not traveling a lot. which means focused a lot more on delivery. And so it's really not been a substantial impact to us. And in many ways, it is the justification for security tokens. So what a lot of the uncertainty and the cracks that we see in the market are the very reason why companies, the Security Token Academy exists, and companies like ours are so excited about the future, because we have the tools to do this better. And so that in that way, it's providing a tailwind for us. Yeah, it's really,
obviously no one's celebrating what's going on. It's a horror in so many ways to so many people. But from a from a strictly sort of macro level for this industry, it really is showing a lot of the use cases that would be improved by having this really ramp up for everybody. Obviously, Securrency is a huge part of that globally already, like you said. So you guys have some interesting news, and there's a specific kind of operation and a participation, let's call it, that you guys are taking part in, and that's around ETFs. For people who might not be that fluent in terminology and acronyms, what's an ETF and how does it compare to a mutual fund? And then once we define that, we'll get into some more meaty stuff.
Yeah, actually, one of the shining stars in the whole volatility in the market has been exchange traded funds. So they are, what an exchange traded fund is a fund that is an asset that contains other assets that trades on public exchanges, the New York Stock Exchange or NASDAQ. They represent, so if you buy shares of an exchange traded fund, what you're actually getting is ownership rights of a bunch of shares of other things. So a simple example, one of the earliest exchange traded funds was a SPDR fund. So now instead of having to invest, SPDR being the S&P 500, a fund that represented the S&P 500. So instead of having to go and buy shares in each company in the S&P 500, you buy one share or the shares of the fund, and in turn, the fund is managing all of those underlying shares. So it's simple. You can get much broader exposures by purchasing these funds, and that's beneficial because you don't want your future to be based on the fact that one particular company or another company had a good day or a bad day or stumbled over something or is particularly affected by COVID, for example. Right. You want to invest in a sector, and so it gives you risk diversification. Now, what's exciting about ETFs, exchange traded funds, is they have displaced, or they are rapidly displacing, mutual funds. So mutual funds have been around for some time. There are places where you could get the same sort of exposure to an industry. You'd have emerging market funds that you can invest in. But ETFs are a wrapper, a way of getting to those underlying assets that's much more efficient than mutual funds, efficient in several ways. First, with the mutual fund, I'm really only daily at the liquid at the daily level. So as if I want to buy shares of a particular mutual fund, at the end of the day, I place my order and the next day it's fulfilled. And so I have to wait. And this actually happened. I did an interview right in the middle of COVID, and really when the news was hitting that this was a big deal. And as you know, the markets had collapsed. I called the bottom. I thought, okay, this is a time to move capital into the market on a day in which it was spiking up. Now, I got lucky. This isn't investment advice at all in terms of whether to get in or not. But because of the mutual fund in my retirement fund, could not wait to place that order. Did not place the order until the end of the day. I lost 8% on that entire investment as the market went up that day. Right. And that's substantial in terms of the impact on my ability to retire. And whereas with an ETF, that order clear, when I call the broker, I place that order, it's instant. Now, there are other substantial advantages that are really important in terms of tax advantages and other components as well. But what you see is a better wrapper. Mm-hmm. Now, our investors, and in fact, our partner in this, WisdomTree, was one of the pioneers in this space in terms of exchange traded funds. And what they saw, they came in as an indexing service, they saw that ETFs would displace the mutual fund industry. And so they've made their mark, and they're the largest independent asset manager in the ETF space on the advantages that ETFs have on mutual funds. But they came to realize that tokenized mutual funds may in fact displace ETFs.
Okay, so that's a good segue there for us here at the Security Token Academy. So exactly. For those who are riveted by what you're describing, now it sounds like you're going to the juicy part, which is how we're, okay, so we get that everybody can understand that the ETFs have these advantages over the mutual fund. What is it that the security token brings to an ETF that's better than even, let's say, an individual asset token, or on the other hand, better than a non-token ownership share of an ETF?
Yes. So the WisdomTree spent a lot of time in due diligence looking across the various solutions in the space as they were looking into, okay, we believe that this market may in fact disrupt the exchange traded fund space, but as a institutional brand, they needed compliance tools. So their desire was to move from an asset that's traded here in the US and US markets, or as they have a European presence in Europe on European markets, to an asset that could trade globally. So they wanted broader distribution. Of course, broader distribution, more investors, being able to reach global markets, which is the power of blockchain, because it is a global technology, gives them more assets under management, but it requires compliance tools that know the securities regulations of, say, Singapore or the Australian market or the UAE, et cetera. And that's the tools, as we've discussed in prior discussions, that Securrency really specializes in, is the ability to make smart tokens. That is, tokens that know what they are allowed to do and know the regulation of the various jurisdictions, and therefore can move in efficient transactions between those markets. So that's one benefit, immediate benefit to WisdomTree, as we will be moving these funds out into global markets. The second benefit of blockchain is just smart contracts. So ultimately, the long benefit here is the ability to automate back office functions associated with asset management. So we recently submitted a patent pending, on automated asset management strategies in the space. And we'll go into, there's a lot of detail to the way this works, but you can imagine funds that manage themselves and produce the information so that you can really drive down the cost of fund management. And that's key in across all of the market, in the funds world, in mutual fund world, and the exchange traded fund world, is the fee compression is tremendous in those industries right now. Why? Investors demand more efficient assets. They don't want money to go to overhead. They want it to go to producing value. So what they want is very efficient fund processing, and smart contracts actually create the channel for it.
We have the full interview with Dan Doney on our website. Be sure to check it out. By the way, Securrency is a gold member of the Security Token Academy. To learn more, go to our website and click Directory and select Corporate Member. Hey, did you know that you can get the latest industry updates in our free weekly newsletter, the Security Token Edge? The newsletter is packed full of insightful information about the security token industry. To subscribe and get your free weekly copy, go to our website, securitytokenacademy.com. We also invite you to check out the Digital Wrapper on Medium. It's our behind-the-scenes series with the teams building out the security token industry. These are in-depth interviews covering a wide variety of topics. You can view these when you follow us on Medium. You can find more information on our website, securitytokenacademy.com. I want to remind our viewers that if you have any questions about security tokens, be sure to email us. We could answer them right here on a future episode of Security Token Insight. The address is insight@securitytokenacademy.com. Be sure to include your name with your question. One more time, the address is insight@securitytokenacademy.com. You can also learn more by visiting the Frequently Asked Questions page on our website by clicking on, what else? The FAQ tab. Our Frequently Asked Questions page is packed full of security token industry terms and concepts. Today's term of the day is cost reduction. So what is cost reduction? One of the most attractive benefits for security tokens are the proposed reduction in back office and administrative costs associated with today's issuance and management of securities. For example, when startups are acquired, reconciling capitalization tables, cap tables, to the underlying purchase agreements and option grants can be costly. When ownership claims are tokenized, cap tables are reconciled all in real time by code. Get it? All right, that's it for today's episode. Be sure to follow us on Twitter, Facebook, Telegram, and Medium. And don't forget to subscribe to our YouTube page so you don't miss out on any of our videos and expert interviews. And a big thank you to all of our Gold corporate members as well. We invite you to learn more about our corporate members by clicking on the directory tab and click Corporate Member. I'm Adam Chapnick. For everyone here at Security Token Academy, thanks so much for watching.